A very good evening, and thank you for joining us today for Sequent Scientific's earnings conference call for the second quarter and half year ended financial year 2021. Today we have with us Manish, Sequent Managing Director, Sharath, Joint Managing Director, and Tushar, CFO, to share the highlights of the business and financials for the quarter. I hope you've gone through our results release and the quarterly investor presentation, which have been uploaded on our website as well as stock exchange website. The transcript for this call will be available in a week's time on the company's website. Please note that today's discussion may be forward-looking in nature and must be viewed in relation to risks pertaining to our business. After the end of this call, in case you have any further questions, please feel free to reach out to the investor relations team. I now hand over the call to Manish to make the opening comments.
Thank you, Abhishek. And early good evening, friends. A warm welcome to all of you for the Q2FY21 earnings call of Sequent. I do hope all of you are keeping safe and also doing the right things as advised by our respective governments and all. Joining me on this call today, I have with me Mr. Sharath Narsapur, our Joint Managing Director, as also Tushar Mistry, our CFO. I'm sure all of you are in receipt of our earnings release and the investor deck, and the same also has been uploaded on the exchanges as well as our website. This quarter is indeed a special one in the journey of the company, a quarter where there has been a seamless transition to the new promoter, that is the Carlyle Group, who have assumed the charge to give the strategic direction as well as resources to drive the company into the next orbit. The board has also been broad-based with the induction of Dr. Kamal Sharma as also Mr. Milind Sarvate, both of whom are industry stalwarts and who join us as independent directors. We also now have Neeraj Bharadwaj, Rahul Mukim, and Greg Andrews, who have joined the board as nominees of Carlyle. Going by our first board interaction that I have had with them today, I am convinced that their inputs and combined experience will add immense value for the Sequent shareholders in the longer term. At this moment, I would also like to place my heartfelt thanks and gratitude to our erstwhile promoters who have provided us the necessary support and impetus towards this critical phase of company and guide us on what we call as Sequent 1.0. It is still early days and we are yet to fully visualize the Sequent 2.0. However, I must mention that I see Sequent 2.0 to be not really any different from Sequent 1.0, excepting maybe a little bolder. Towards that end, your company has already consolidated its minority holdings in Turkey and Netherlands, a clear reflection of the confidence in the growth potential of these businesses going forward. Greater details around this are already called out in the earnings deck that has been shared with you. As we broaden our business canvas, it is also imperative to look at the bigger picture of the industry that we straddle, the animal health industry. For the people that have followed our story, you would agree with me when I say that it is unique in many respects and does not necessarily mirror the human pharma sector. While we have learned the nuances of the industry, it requires an extra impetus to leapfrog rivals and be counted in the space. With this in mind, we have hired Stonehaven Consulting, a niche animal health consulting firm, to help us draw out a blueprint of the journey of the company into the next orbit. We do believe that the inputs of Stonehaven will transform the outlook and put us on a path that would enable us to dream of being amongst the global top 10 animal health companies in the world. While the company is on a transitionary path, the alignment and continuity with the existing management team ensures stability and direction to the journey that we have all embarked upon. It gives me great pride and satisfaction to highlight that the whole team of 1700 plus strong workforce that we have at Sequent have raised the bar, bringing out the best out of us, and 3 of the best quarters have occurred to us in these very challenging times. We have turned in this performance even as we keep employee safety as paramount. While we did have an incident in March wherein our factory had to be shut for about 10 days due to cluster of COVID cases being detected in the area, our operations in other plants have continued uninterrupted. This now brings me to the operational performance for this quarter. This was another quarter of strong performance, both at the revenue as well as the margin levels. Revenues at 346 crores for the quarter were up a little over 21% vis-a-vis the corresponding quarter of last year, as also on a half-yearly basis are higher by almost 17%. We also had the best ever EBITDA in our business, with the EBITDA for the current quarter at almost 60 crores, up 58% on a YOY basis, and also the half-year EBITDA has mirrored a similar momentum at about 112 crores. Profit after tax for the quarter was flat on account of a one-off cost on account of acceleration of ESOPs, as well as a one-time bonus given to all the employees due to the change of control, as well as decision to wind down the operations in Rivera, France, due to the current unfavorable environment. Adjusted for these one-offs, the PAT for the quarter was almost 30 crores. Cash from operations for the first half have been almost 100 crores and reflect not only the strength of our business model, but has also helped us pare down the debt by close to 33% during the quarter. The growth for the quarter was formulation-led, with the formulation business growing at 24.7% for the quarter, driven by the geographies or the regions of Latin America and Turkey. India also contributed to the sharp recovery in the emerging market as far as our business is concerned. API business continued to show traction with a growth of 18% during the quarter, and we recorded our highest ever revenues of close to 120 crores in this business. On the balance sheet side, our focus on cash generation is paying rich dividend with 100 crores of free cash generated in the first half, while our EBITDA to cash conversion is 80% plus. At this rate, we expect to become debt-free in next 12 months' time. The return on capital employed is also now in its early 20s, almost a 3x growth in last 3 years. We now continue to look at the rest of the year with increasing confidence, even as we stay cautious and brace ourselves to the second wave of lockdown that we already see in many of our markets. I will now open the floor to question and answers.
Ali, can we take the questions now, please?
Sure. Thank you very much. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. First question is from the line of Vishal Manchanda from Nirmal Bang. Please go ahead.
Thanks for the opportunity and congratulations on a very good set of numbers. I just could notice in your presentation you indicated the approval for the injectable product that was basically the largest injectable product in animal health has come through for you in Europe. Could you kind of talk about the launch plans and the competition that you have, whether other players have also got an approval here?
Yep. So Vishal, obviously this being the largest injectable product and also one of the largest opportunities in animal health, we believe this would be kind of a game changer in animal health industry, which generally does not see too many launches on day one of patent expiry. This will be an exceptional product. As we speak, there are 13 approvals for this product in Europe, including ourselves. So that is as far as competition is concerned. We do not know how the behavior will come out because animal health does not have the gap in terms of pricing between generics and innovator prices as you see in human pharma. However, this product might be different and we will figure out as we go along. at our end, we are ready for the day one launch in a way, and the patent expires sometime in December, and we should be in the market at that point of time.
Okay. So there's a bit of competition on this product. So do you see, would that mean, can the innovator also discount? Because is that a possibility? Does the innovator also discount their products in order to retain market share, or that's not a phenomena we see in the animal health market?
So again, without commenting on what will happen in this product, because this in a way will slightly change the rules of the game of this industry. But generally speaking, innovator does not discount in animal health for the simple reason because the genericization is very slow. And if they discount it, they will be losing much more than not discounting it.
Got it. So when you say 13 approvals, so does this mean they have an approval across geographies, or that get the product shared in Europe?
Vishal, your voice got muffled and I'm not sure whether I heard you properly. Can you either repeat the question or come closer to the mic while repeating?
Yeah. So am I audible now? Is this better?
That's correct.
So just wanted to ask you whether we need to file again for various geographies separately. Like if you want to launch in Spain, would that mean a separate filing from now on, or so basically how does this work now?
So
in terms of launch?
So this is a DCP, a decentralized procedure, and so therefore in a way based on our filing, we had filed for 19 countries in Europe. So we have approvals in those 19 countries.
Okay. And likewise, the competition too would have filed for the entire. Would you come to know which countries has the competing players filed for?
So everyone has their own strategy, so I can't give a general answer. But my guess is you will see between 8 to 10 competitors out of the 13 in every country.
Got it.
Yeah. But that's a very general response I'm saying. I've not. We can do a country by country analysis to have a precise number.
And the other point is, like, you just there was an exceptional charge you took about closing down your France operation. So could you talk more about why that decision to close down France?
Yeah. So as you would have been hearing us in the past, France and Italy were the two markets wherein we had established greenfield operations in last couple of years. Clearly, the COVID environment makes it very difficult to do a startup operations in any country because it's being a branded generic marketing, it is physical contact intensive, wherein you go out and detail. Now, for last 7 months, obviously that has been a struggle. And therefore, with the new shareholders, when we got together, one of the calls that was taken was that with the uncertainty around this going to prolong for a long period of time, there was no point in continuing to lose. And therefore, it was decided to wind down the operations in France. You'll also notice that we have not done the same in Italy while we did it in France. The reason is that the models in both France and Italy are different. In Italy, you do not hire the field force, while in France, you have to hire field force on your roles. So therefore, the cost structures become very different. And that's the reason we took a call for France, even as we continue to invest in Italy.
Got it. So would this mean you'll have some savings going forward? Maybe not very meaningful, but this will lead to some savings going forward.
Some what?
Some savings on your cost structure going forward.
Very much. I mean, there will be some, but it is not material in the scheme of things anymore.
Okay. Thank you. That's all from my side.
Thank you, Vishal.
Thank you. Before we take the next question, we would like to remind participants that you may press star and 1 to ask a question. The next question is from the line of Cinderella Carvalho from Centrum Broking. Please go ahead.
question, and congratulations on great set of numbers. So what is driving our numbers post-COVID? I mean, if you could help us understand, even on the formulation side, our efforts are visible, very, very strong. Even on the API side, and when I look at the margins, I mean, we are definitely delivering well ahead of what anyone would have expected. So if you could help us understand the key drivers. I understand our earlier commentary, so anything incremental over and above that you could highlight. And the second part is on the India formulation on the Zoetis side. So if you could just, you have a commentary mentioned which says 2x scale, so if you could help us understand that as well.
Yeah. So, Cinderella, I would refuse to give our secret sauce to you for obvious reasons, but it's all about execution, and animal health industry is all about small things. There are no big ticket opportunities, so it's doing many things and continuing to stay focused on doing those many things. So it's a very simple secret on the way we are running our business. It is built around multiple growth models. So to that extent, we are not dependent on something big to fire for us, but it's all about doing multiple things with a strong team that we have, and I must compliment the quality of team that we have built up over the years, which has helped in this execution. So I don't honestly have an answer for the first part. The second part, which is pertaining to our scale-up in India business, clearly the scale-up has occurred on 3 counts. One is the distribution of Zoetis products that has been started in the current quarter. But beyond that, even our own portfolio has done very well, and we have grown about 32% in the first half as far as our cattle business is concerned, without considering the Zoetis portfolio. And third is the poultry side of business, which we all know that suffered in the first quarter because of the COVID-related rumors that had come around the poultry business. That has since died down. Therefore, the business is also back on recovery mode as far as Q2 is concerned. So all in all, we kind of more than doubled our revenues in India, driven by all the 3 factors.
One more, if I may. So just want to understand the filings that we are discussing in terms of the larger products. The earlier participants were asking. If you could just help us understand how many such more can we expect in another 1 or 2 years?
It's big product, the
Filings.
So, see, filings,
Research kind of other product.
So there are not too many big products in animal health. And one of our, when the analyst world wants to see big numbers, we actually do not like big numbers, as we have all discovered even in the case of tulathromycin, wherein there are 13 participants on day 1. So we actually as a company prefer smaller products, and that has been our strategy, and that also is the way animal health industry is structured, to be candid. So therefore, I don't foresee even a $100 million opportunity in animal health going off patent in next 3 years.
Okay. That's helpful. And so on the API side, the growth is, if you could help us understand the growth divide in terms of price and volume, and the stability around the pricing.
So, we have been guiding around this kind of growth numbers in our API business for many quarters now. And this is part of our strategy. There is no price-led growth in terms of price increases, but it is a quality of business-led growth. As we move more and more from unregulated markets to the better markets of US and Europe. So same product obviously fetches you better outcomes in these markets. And this is part of the design, and that's how the entire Vizag investment thesis is. So if you're referring to price increase coming out of something happening in the marketplace, that's not what we are focusing on. Our focus is on getting better realization through better customers and or better markets.
Okay, sir. Thank you so much and all the way well.
Thank you, Cinderella.
Thank you. The next question is from the line of Sachin Kasira from Swan Investments. Please go ahead.
Good afternoon, sir, and congrats for a good set of numbers. My first question was on US. Is it that with the new consultant, now we are again looking at completely new strategy for the US, or if you could just tell us what are our thoughts on the US market going? So I think earlier we were looking at somewhere around FY22 launch for the US.
Yeah. So I think the appointment of this new consultant, Stonehaven, has nothing to do to shape up our medium-term strategy. It's all about shaping the next vision for Sequent, maybe in next 5 years' time. And so the real scope of their work is setting up a vision for Sequent 2.0, which may entail new markets and or new areas of business. So like we are currently focused on production animals, should we look at companion animals as well? So those are the kind of strategic imperatives that the new consultant is looking at, because they are global leaders or experts in animal health sector. Having said that, I do not foresee any changes in the outcomes that we are planning in the next 2 to 3 years.
So in that case, can you just update us what is our status of our entry to the US market? Earlier we were looking at FY22 launch. Just some update there.
Yeah. So save for an acquisition, potential acquisition, I don't think anything changes as far as our US strategy is concerned. And there's no way we can fast track anything in US. We will still be in line for a FY22 launch as far as our formulation commercialization is concerned in US.
And so currently, what is our pipeline in US? If you could just update us in terms of the filings and how many products you think you will be able to launch next year tentatively?
So as we speak, there is only one filing that we have made so far in US, and we currently are working on a pipeline of 10 products, which will be commercialized in next 3 to 4 years.
Sure. So my second question was on Turkey. Because of this currency depreciation, the reported numbers are much lower than the constant currency. So just to understand this difference, this entire growth of 48% in the quarter and maybe 30% close to in the first half, is it all volume driven, or is it that we, because the currency is depreciating so much, we also adjust the prices just, to catch up? If you could just tell us that. Because in case it's volume driven, then once this currency stabilizes, then the reported numbers from Turkey will also look very, very good.
Yeah. So a large part of this growth is volume driven. Having said that, you do periodically adjust your prices for currency. But if you notice, the currency depreciation has been very sudden in Turkey because of the geopolitical events around the country. So therefore, I would say almost 75% of the growth is coming out of volume, and about 25% odd would come out of price adjustments.
And so does this mean that we are getting a lot of market share in Turkey because this type of growth? I'm sure the market must not be growing at such a fast pace. And so
being a local manufacturer obviously has its big advantages, and that's what we are really taking good advantage of.
Sure. So my last question over India, have you seen the full benefit of the Zoetis tie-up, or part of it is get reflected fully in Q3?
No. So, I mean, the Zoetis arrangement was effective for the entire Q2. So it was commercialized from 1st July. So therefore, benefit is fully there in Q2. Having said that, the benefit will also be there in Q3. So
I was talking more in terms of certain integration or synergy benefits or distribution, those type of things.
No. There is no such thing, because the entire sales and distribution is handled by Sequent or Elvira. So there is no further integration benefit or anything. We have a transfer pricing arrangement with Zoetis. They supply us at a price and we sell it at our own price. So it's a very neat and clean arrangement. There is no rationalization of expenses concerned here.
Sure. Thank you so much, sir, and wish you all the best.
Thank you, Sachin.
Thank you. The next question is from the line of Sajal Kapoor from Unseen Risk Advisors. Please go ahead.
Yeah, thanks for taking my question and good evening, everyone. I have a couple of questions. First one is on our cash flow. So on EBITDA to cash conversion, in animal health, when we look at players like Zoetis and Elanco and other large and mid-sized companies, they typically convert 75 to 80% EBITDA into cash. So how come we have done much better in H1, and can we continue to do this 85-90% conversion EBITDA to cash going forward? Because H1 we have done 90%.
Yeah. So, this is in a way, slightly different period that we are dealing with. And given the quality of our customers, obviously our cash flows and EBITDA to cash conversion is very high. But I would tend to agree with you in terms of that on a longer term basis, that 75 to 80% would be a good indicator and not the 90% that we have achieved in the first half. And this will also be reflected in, if you see our cash flow statement over a couple of years, we have been in that region consistently.
Yes, Manish, agree. Yeah. No, that's helpful.
Sajal, just one second. Just to add on, obviously, we were also extremely, given the uncertain environment we were living in, we were also very concerned and very focused on this aspect in this quarter or this half year.
Right.
That also is reflected in the numbers.
Which is part of our execution over the period, right? So that's where the management execution comes into play. So that's very heartening to note. And Manish, on the CDMO, it's good to see some early progress. You have mentioned some two products there. So on the two US FDA approved GLP compliant analytical services labs that we have, one in Mangalore and the other one in Bangalore, how do they fit into this larger CDMO services, and where can this business as a whole go in the next, say, 3 to 5 years, assuming we get to work with majority of the large and mid-sized companies?
Yeah. So, Sajal, this is one question you'll have to give us some time to respond. This is also part of the mandate we are working with Stonehaven, because technically or tactfully, we are only going to focus on veterinary CDMOs and not get into the human space. So we are yet to size this opportunity, and this is something we'll have a better response maybe in a couple of months' time, post our engagement with Stonehaven.
Sure, Manish. And if I can just quickly squeeze one more. So on the US distribution alliance and or inorganic updates, because I think we are just 4 or 5 months away from the patent expiry of that big cattle injectable of Zoetis in the US. So if inorganic is not possible, then we would have to do some sort of our distribution alliance with an existing player or something around. So can you just throw some light on that front, please?
Yeah. So I think we have been clear on this, that we won't be on day one in US as far as that product is concerned, and we will be at least 15 to 18 months delayed in terms of day one or our launch of the product. So per se, it does not bother us. It's not part of our business plan. In fact, while there are 13 approvals in EU, there is still not a single approval in US. And that the single reason is that there are not many US FDA approved injectable plants in the veterinary space, while there are many in the EU space. So there is a big difference between US and EU as far as injectables are concerned. I don't foresee significant competition in US at least for some period of time. We will be certainly delayed. As far as our own acquisition strategy for US is concerned, is again that's one area of significant engagement with Stonehaven, and we also see Carlyle playing a very big role in terms of enlarging our vision as far as acquisitions are concerned for US.
Sure. Congratulations again for a great execution to the entire team, and wish you guys all the very best. Thank you.
Thank you, Sajal.
Thank you. The next question is from the line of Ashish Tavkar from Motilal Oswal Asset Management. Please go ahead.
Yeah, thanks for the opportunity. So you did say earlier that we have 6 first to filings, and given that 40% of our R&D is now in the injectable space, so if you could help us broadly understand how big this opportunity can become for us.
Yeah. So I presume you are talking of the APIs because there were 6 APIs wherein we are the only filers as far as VMF are concerned.
Yes, sir.
Is that right? Yeah. So again, Ashish, it's a very difficult question to answer simply because of lack of any data in this industry. So none of us know the true size of those molecules in the industry. Also, some of those APIs are still under patent. So already we are seeing traction as far as companies approaching us for their formulation development. But very difficult to give you a guidance in terms of what numbers it can generate for us.
Okay. And if we were to monetize these API opportunities, would we be having enough formulation injectable capacities with us?
Absolutely.
Okay. And what's the status in Europe now, as far as these facilities are concerned?
Facility, we have 2 facilities in Europe, one in Germany which is injectable and another one in Spain which is an oral facility, and obviously they have all the necessary EU approvals.
Okay. And so in regards to earlier participant question wherein you said we are 15 to 18 months away for that US launch, is it something to do with the Germany facility? Does that facility need to have US FDA inspection and then approval?
Absolutely. Absolutely.
Right.
And the reason, obviously, in the current environment, inspections are not going to happen in a jiffy or in a quick time.
Okay. Right. Just one more from my side. There are a few other companies which have that is projected on approval, and they are talking big about this. So, pardon me for my ignorance. If we are not there in that molecule, did we at some point in time in the past happen to evaluate this?
Sorry, Ashish, I didn't understand your question. Can you repeat the thing?
So there's one molecule, progesterone.
Yeah, progesterone.
Which also, yeah.
That's not a animal health molecule. It's a human pharma molecule.
Okay.
We are not in that space. It's not our area of expertise.
Okay, no issues. Okay, pardon my ignorance. And so, anything on the obviously the kind of EBITDA margins? Just one last note from my side. The kind of margins that we do, and if I try to see what our peers are doing, would you like to guide us directionally as far as this margin profile for our company is concerned?
I think our guidance stays the same, that we have been looking at mid-teens revenue growth and a 200 basis margin improvement year on year in medium term, and we stay kind of both confident and committed to deliver those kind of numbers.
Okay, great, sir. Great, Manish. Thanks and all the best.
Yeah, thank you, Ashish.
Thank you. The next question is from the line of Bharat Sheth from Quest Investment Advisors. Please go ahead.
Hi, congratulations, sir, on the excellent performance. So, sir, I mean, the way you are saying, I mean, this with new promoter coming in, so medium-term policy, our strategy remains the same for next 2-3 years. Post that, they will have some kind of a change in the strategy. Is that fair understanding?
No, that's not a fair understanding. What we are saying is, fundamentally, given the nature of industry we are in, pharmaceutical or a regulated industry, any action that anybody takes will take minimum 2 to 3 years to fructify.
Okay.
So even if there is first, we are not looking of a change of strategy. We are only looking at broadening our vision or enlarging our vision. which may entail certain bolder steps. So if we were looking at a US acquisition, if on our own we could have looked at a $10 million or a $20 million transaction, obviously with Carlyle, it gives us the ability to look at a bigger transaction. So that's the kind of changes I foresee with Carlyle coming in the picture. And anything that we undertake with under the new shareholding structure is therefore what I'm saying is any changes will only impact medium to long term and nothing in the short to medium term, given the nature of the industry we are in.
Okay. And sir, any strategy to enter in the Chinese market?
अभी तो एयरक्राफ्ट भी नहीं जा सकते यार इंडिया से, आप क्या चाइना भेज रहे हैं हमें?
बराबर है सर, मगर with the change in or Carlyle taking over it, so we were looking for two markets, US and China.
Yeah, so this is again a part of the work that we are doing with Stonehaven, and based on what comes out of it, because honestly we have no expertise or knowledge of that market, and will be guided by Stonehaven and or Carlyle Group on our strategies for China, simply because it is the second largest animal health market in the world.
The kind of growth we are looking at, so what kind of a capex we have to incur for next couple of years?
So there are two elements to our capex which we have been guiding to. One is our expansion at Vizag plant, which we are scaling up. The first phase is running a little late but should be completed sometime in early Q4 of the current year, and the second phase will be completed next year. Between these two phases, we will be good enough to deliver our business requirements as we foresee for next 3 to 4 years, and collective investment will be about $10 million in this. In addition, we are looking at an expansion at Bremer for our injectable footprint. That was more to cater to the US market. That is one project which is running late because of the current situation in Europe, because it entails or involves a cross-border execution of project, and that is something we have deferred by minimum 6 to 9 months, and it will have a total capex outlay of about 3 million euros.
Okay. Sir, with the kind of guidance you are giving on the top line and EBITDA margin, so when do we expect to cross 20% of ROC and ROE?
So I think on ROC front, if you do our first half annualized, we are already touching 20%.
Okay.
And we certainly obviously would like to improve from there and not allow it to dip. ROE, honestly, we haven't done any calculation yet, but we will look into it. But as far as returns are concerned, we are highly motivated by that aspect of business, and we continue to track our business on the right way.
Okay. And sir, last question on my side. What will be the, ETR will be there for next 2-3 years?
Yeah, Tushar. So ETR we have been guiding at around between 18 to 20% kind of ETR.
Okay.
You see in the first half the ETR is slightly higher.
Correct.
But that is purely because in some geographies we pay taxes in advance and wait for the assessments to get over and get those credits back. But due to the current situation, some of those would be delayed in the current scenario. So we may see a year of absorption here, but on a long-term basis, we should remain within 18% kind of tax rate.
Okay. Thank you very much. All the best, sir.
Thank you.
Thank you. Thank you, brother.
The next question is from the line of Akash Mangani from BI AXA Mutual Fund. Please go ahead.
Yeah, good evening to the management. A lot of the questions that I want to ask I've already asked, so I have a few additional ones. Could you just talk about the CDMO opportunity in a bit of detail? You mentioned in the PPT that you signed on with a particular animal health line. Could you just talk about what sort of market there is that you can explore over the next couple of years? Who are the other players in this market who are doing a sizable sort of revenue, and what sort of profitability does this segment operate at? Some broad strokes would also do. That's the first question.
So Akash, as I mentioned in one of my earlier responses, we are very new to this business, and we are yet to scope out the contours of this business. So give us some time before we can come out with the guidance as far as the opportunity is concerned. It's not a very well-defined industry per se, separately from human pharma. So currently, most of the work, CDMO work for animal health business is undertaken by companies who do both animal health and human pharma work. But going forward, there is a need of segregation, and that's what we are getting kind of feelers from our customer, and that was the reason for this foray. So, but give us some time before we can come back to you with a more specific answer, as we are currently engaged both in learning this business and also engaged with Stonehaven in sizing this business.
Okay. The next is on this injectable generic that you plan to launch in Europe. You mentioned that there are 13 other competitors in the market right now who filed for the generic version. A couple of quarters back, you have mentioned there were 2 or 3 competitors. So, does that mean that the profitability that you had envisaged, the pricing that you had envisaged earlier could be materially lower because of the hyper-competitive activity that we may see in this segment?
Yeah. So if you would read our earlier commentaries, I've been always very clear that this particular molecule will be a game changer in animal health and may not be as big an opportunity as people may think it is. So in a way, we are proved right given the number of competitors. Having said that, we had never taken it as a big part of our business plan because for us it was a learning exercise. And most of us come from human pharma, so we are aware of the hyper competition that exists, and anything big always attracts much attention. So in our business plan, to be candid, it does not make much of a difference. We had kept very small numbers for ourselves. But yes, it will be a good wake-up call for many of the animal health guys who are not used to seeing such kind of competition.
So when you say game changer, I mean, if you're not building in a lot of revenue from this particular line of business, game changer in what sense? In terms of, showcasing your abilities to your partners that, you also have it in you to sort of get the technology in place to compete with the biggies. I mean, could you elaborate on that?
Yeah. No, I was saying this product will be a game changer for the industry in terms of how competitive dynamics play out. It was not a game changer for us. Having said that, it has demonstrated our ability because this was our first filing in Europe from India. And we got a DCP approval in 11 months, which is a very good reflection of our development as also our regulatory capabilities. So for us, it was kind of a validation of our capabilities. And for the industry, given the size and scale of the molecule, it was kind of effectively a new learning of seeing hyper competition.
Okay. Lastly, it's been a couple of quarters since Carlyle has come on board, I think, and we've got a new board in place. So congrats on that. So what are they now looking out for, from a annual milestone point of view? What are the kind of things that are expected out of the current management in terms of deliverables? What has changed? What are they emphasizing on? Some flavors you could talk about.
Yeah, no, so I just needed to correct. It is not couple of quarters, it has been couple of weeks. Carlyle has been on board, I think, from some early September. So it's still...
the transaction was announced, I think, 2 quarters back.
Yeah, so transaction was announced, but they took charge of the company only from 8th of September or so. Somewhere around that, when the when they took the majority stake. So it's still early days. It is still honeymoon period, as I would like to believe. So we are yet to gauge each other. We just completed our first board meeting today with the new board, which includes both Carlyle nominees as also certain industry stalwarts. Clearly, as a management team and as also the Carlyle shareholding team, all of us are excited by the unique opportunity that we are sitting on in creating a global animal health business from India. But you'll need to give us some time before we can share the Vision 2.0 as far as Sequent is concerned. I can assure you it will not be very different, but a little bolder than what we were in the past.
Okay. Thank you. Wish you all the best.
Yeah. Thank you, Akash.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The next question is from the line of Sharan Pillai from Allegro Capital. Please go ahead.
Hi. Yeah, good evening. Thank you so much for the opportunity. I had a couple of questions. My first one was in terms of the key injectable that we had. So when you're saying that 13 to 14 approvals across Europe, are you expecting 13 to 14 competitors on the day one launch, or do you expect this to be sort of spread out across a few months or a few quarters?
Difficult question to answer because obviously we don't know how competitors are working on it in that sense. So when we say 13 approvals, it doesn't mean all companies have approvals in all the countries. It can be country-specific approvals or can be multi-country approvals as per their strategies. Also, some of them are linked with common manufacturing, so there are going to be challenges. None of us know how many products will be there on day one of the launch. But having said that, it will be certainly far more competitive than any other product that has genericized in the past.
Okay. So, my second question was in terms of the CDMO business. Earlier, maybe a few quarters ago, we had mentioned that we had initiated our first few contracts and had a proposal for around a dozen products that we were evaluating. I just wanted to ascertain whether you've received any more proposals or initiated any more contracts. So what's the status is so far?
Yeah, I'll ask my colleague Sharad to respond to this because he's the one driving it.
So the first couple of projects which were initiated, they have fructified in terms of awards, and out of that, one product is already delivered, and the other one we are on our way to deliver. But there is a portfolio of 10 products which we are working on, and out of that, 3 are almost confirmed, and rest of them are still the due diligence is on. So that being the status, we see a very good traction there, but it's too early to say. We are in our infancy in that part of the business. We need to see how it tracks.
Okay, yeah. And look, just a follow-up on that. Are we seeing a greater amount of inquiries coming, or what's the status in terms of client engagement that's taking place?
No, see, as Manish was, describing the whole CDMO business in animal health space, it's just a start. And there is one company which is very keenly working, but we expect that the others also will follow this model sooner or later, just for the reason that the contract manufacturers who are manufacturing for them do both animal drugs as well as human drugs, and in future there is a separation or segregation which is required. So we see that happening in near future.
Oh, okay, I understand. Just one last question in terms of India. We had met last quarter that we were facing some issues in terms of collection from stockists and retailers, etc., and had expected it to improve in Q2. Has that improvement taken place, or is that still something that we're dealing with at the moment?
No, we were not facing any challenges, but we were being cautious in terms of the amount we were dispatching. We have always been, for us, cash comes first. So we are a very disciplined company in that respect, and that has been our strategy and has worked out well for us.
Oh, okay. Apologies. Thank you so much.
The only person with white hair in our company is Tushar Mistry, because he doesn't allow us to do anything without collecting first.
Okay, fine. That's a good way to run it. Thank you so much. All the best for the future.
Thank you.
Thank you. The next question is from the line of Akash Jain from MoneyCurve. Please go ahead.
Hi, Manish. Two questions. One is just a quick follow-up on the earlier question in terms of the India business. Like you rightly said, we were a little cautious of the India market given the credit scenario. Is the business now completely back to normal, or there's still some way to go before we can say that things have normalized completely in India? So that's the first part. The second part is on the rising cases of COVID in Europe. And if I am not mistaken, we really did not have that much of a disruption when the first round of cases happened in Europe. So can you please share a little bit of what has happened earlier and how worried are you about rising cases now in Europe? Because now we have a sort of a understanding of what happened earlier, so we are probably better prepared as well. Thank you.
Yeah. So your first question was around India, and I can certainly say that India is almost back to normal. We are more of a rural kind of industry, so we were obviously off the ground much earlier than the rest of the country, but certainly India business is more or less back to normal, excepting for the travel part, because the field force still cannot travel freely, and they have their own ways of contacting the doctors and the customers. That is as far as India is concerned. Your second question was on Europe. Certainly the second wave of lockdown is less severe than the first wave, so it's more like a nighttime curfew. But traveling otherwise within the cities and all are allowed. Again, at the cost of reiterating, our animal industry comes under essential industries and therefore does not get infected by any lockdowns or restrictions. So excepting for the stray cases that we will face in our own operations, which may have an impact, otherwise we don't see any challenges.
Okay, that's very helpful. The acquisition that we have completed in Turkey, has the benefit of minority interest been completely absorbed, or what was is it only for part of the quarter that we could get the benefit of the consolidation from Turkey?
No, the acquisition has been completed only in early November.
Okay.
So consolidation has not been undertaken in the last quarter financial results, excepting, I think, the liability part. So, Tushar, if you can explain.
Yeah, so on the financial or on the P&L front, the minority for Q2 still has the minority for Turkey. But what has been accounted is the liability for acquiring that stake, because agreement was already entered by that time, and the liability for that was recognized. The consolidation of the minority stake at the P&L level will start happening from November onwards, as Manish explained.
And like Manish said, we sold the stake in Stride, but we still continue to hold some stake in Solara, right? If I'm not mistaken.
Yes, that is right.
And is there a plan for that as well, in the sense in the near future, or that is something that you will wait and watch?
Wait and watch.
Okay, no problem. Thank you so much.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The next question is from the line of Raj Rishi, an individual investor. Please go ahead.
Yeah, hi. Can you just elaborate on the India advantage in the sector?
This is one question we have responded to multiple private equities who were engaged with us, that this is not an India cost advantage sector, and that is it's the India or the management team's knowledge arbitrage sector that we are working on. So excepting for our API business, which certainly has the India cost arbitrage, and more than cost arbitrage, the technical knowledge arbitrage of India, but otherwise it's fundamentally a knowledge arbitrage business. And you'll see in our own unique business model, all our formulation units are actually not in India.
Okay. So in India, you just have the API part, right?
That's correct, from a manufacturing perspective. But formulation R&D is in India, a big part, and of course, a large part of management think tank is in India and also in Europe.
Okay. Just share this perspective if you can. Like, is it reasonable to expect a 2x, 3x kind of revenue in years to come from this company, given the opportunity you see and your skill set?
In what period of time?
In over a period of time, you can say over a period of time, say 3 to 5 years. Can you share some perspective? Like, is it possible to grow like 3x in 5 years, 7 years? Does that opportunity exist, and do you have the skill set to tap into it? Like, if you can share a perspective.
So I'll split my response in two buckets. Certainly, as an industry, there is a huge headroom for growth because we are still a speck in the entire spectrum as far as industry is concerned. Having said that, it's a branded generic industry, and therefore market share gains are always slow and steady. So it's not something that we throw some money or hire more people and then we can double our sales and all that kind of thing. So trying to grow too fast is sometimes dangerous in this industry, given that in a branded generic industry, unless there is a consumption, the material will otherwise come back in over a period, and that too as an expired material. So that's why you will notice that we have been always guiding to a mid-teens growth and not a very, very substantive growth, or because even growing at that rate, we are more than growing double at the industry growth rate, and which is what we are targeting. The third element, of course, is acquisitions. And that is something which can certainly help us scale faster. And that will be obviously an added area in the next phase of growth, given the Carlyle expertise.
Okay. Thanks a lot.
Thank you, Raj.
Thank you. Next question is from the line of Raja Mohan V, an individual investor. Please go ahead.
Thank you for the opportunity, and congratulations, Manish, to you and your team for steering Sequent in such a consistent and predictable fashion with robust outcomes. My query is first with Carlyle. You have indicated to capabilities being bolder and bigger in initiatives. Congratulations on the Stonehaven initiative. Though it is early days, apart from bigger acquisitions, which could be driven by Carlyle, would we be seeing a further meaningful increase in filings as compared to the past? As we have seen, animal health is a small per product industry. Also trying to understand whether we could head towards market leadership in some formulation products over the next 3 to 5 years.
Certainly, I think our next phase of engagement, both with Carlyle, the new board, as well as Stonehaven, is towards identifying more opportunities. And while acquisition is one part of it, obviously the engagement is way beyond acquisitions and looking at both products and our markets, and also the connects of Carlyle team. So certainly, you will see a small incremental increase in all the areas that we are focusing on, be it on the API side, be it on the formulation side, be it number of products, and finally, of course, the acquisition. So clearly, there would be some inputs and value add that we should derive from our engagement with Carlyle, as also the larger board, as also Stonehaven, as far as these are concerned.
Okay, so apart from the acquisition, there exists a possibility of the company growing at the top line higher than the mid-teens that it has promised, apart from the acquisitions too, because you will have more filings and in all areas you'll be having incrementally more impetus post Carlyle.
That is correct, but I must warn you that none of this can fructify in the next 2 years.
Understand. On the Stonehaven front, by when would you expect an output in the form of a report? Hypothetically, even without any change in management, what was the previous estimate of, say, breaking into the top 10 from the current top 20? By that and putting together the bolder initiatives with the new management, we could surmise the new time frames in terms of possibilities of you reaching the top 10 within what time frame?
A difficult question, but let me try to address it. On our own business plan basis, we were targeting to get into top 15 in next 4 years' time. Clearly, the gap between our current stage versus top 10 is very, very different. I mean, there is a huge scale difference to get into the top 10, and on our own, we had not envisaged that. Now, as far as Stonehaven is concerned, it's a between 4 to 5 months engagement. So sometime towards February or March is when we will have a better visibility in terms of the way ahead. And that is the time when we'll be able to give a better answer to your question in terms of whether it is worth even chasing getting into top 10. Because while scale is good, it is not necessarily the best for the shareholders. And which we will be, I mean, the good thing is that Carlyle is a shareholder. They are here for obviously making money. So in a way, their interests are aligned with the rest of the shareholders.
Okay. Final question. Based on the COVID experience, you have indicated to your ability to maintain a reliability which has been noticed by your customers. Has it led to some sort of a further consolidation in the industry for your benefit?
See, again, it's early days. Nobody takes such decisions so quickly. Having said that, when you prove yourself as a reliable supplier in tough times, clearly that stays, and we do foresee us becoming more and more important for our customers as we go along.
Okay. Manish, I would like to end by really being amazed by the kind of balance you maintain and steering the ship in such a very seamless fashion. So hearty congratulations on that, and keep steering the ship in this robust, predictable fashion in the future. All the best.
Thank you, Radhamohan.
Thank you. We will take the last question from the line of Neeraj Mansinka, an individual investor. Please go ahead.
Yeah, hi. Thank you for the opportunity. I just had a question on the India's relationship that you have with Zoetis, which started last quarter. Can you give some color on the potential of Indian market and how large it can be for you as an opportunity, and any thoughts on how you plan to achieve? And the second question is on the Vizag plant expansion. Any more color on how the expansion of Vizag and Mahad may lead to your potential addition in your new markets of opportunity in the revenues for your company?
Yeah, I think your first question was around Zoetis arrangement in India,
yes,
which has just been initiated. Clearly, it is an important arrangement for us as far as our India business is concerned. Of course, in a global scheme of things, it is not a very material number. So, in a way, in India, we will effectively double our revenues because of this arrangement. But as I said, in the global scheme of things, emerging markets, which includes India, is not that significant and should not have a meaningful impact. Having said that, it's a step in the right direction, because when you combine or join forces with the largest in the world, it clearly opens up a lot of new doors for you, and also opens up how people look at you very differently. So that's what we will be using, even as we leverage our own business through the kind of brand equity that they have in India. Now, coming to your second question around Vizag and Mahad expansion, That obviously is part of the growth that we are kind of alluding to on the API side of business. We have been maintaining early 20s growth rates in our API side of business. That will, of course, over a period entail or require certain capacity addition, and our expansions in both Vizag and Mahad are towards achieving those required volumes in FY 2022 onwards.
Okay. And one last question, if I may. Like, you plan to sell APIs in the US market and at the same time launch formulations. So how do you see the growth coming in? Because you will be competing with those players in the formulation and as well as supplying the raw material. So can you give some color on about this thought that you have?
Yeah. So there are 2-3 aspects here which I would like to respond with. First is cooperating and competing is a fairly accepted phenomenon in the pharma business, which also includes both human and animal health. So every Indian company or global company has both APIs as also formulations, right from DRL to Teva to everyone. So it's a very standard accepted model. You don't get into conflict unless you are challenging patents. Okay, and there are hardly any patented products in animal health. So the conflict, if any, that exists is even more limited in animal health space. And the third is, of course, our formulation strategy is not a forward integration strategy with our APIs. Okay, our formulation strategy and API strategies are very, very independent strategy, which has been, we have been telling this right from day one, that we are not seeing API as a cost arbitrage strategy for our formulation business. API is a separate business vertical for us with its own growth engine, and not all our formulations that we are developing for US are based on our APIs. So for us, we see no challenges and or conflicts as far as our either US business or any other market is concerned.
So when do you see the scale up in the API in the US market?
So we are already seeing the scale up as far as US market is concerned. We have done 20 odd filings in US so far. As far as APIs are concerned, already 7 of our veterinary VMFs have been accessed by the customers.
Okay.
Okay, and this is a number which is growing every quarter.
Yeah, I'm tracking that. Okay, great. Thank you very much for your the answers, and wish you good future. Thank you.
Yeah. Thank you, Neeraj.
Thank you. I now hand the conference over to the management for their closing comments.
Yeah, thank you very much. In conclusion, I just want to say that we stay confident of our industry, our own business plan, as also our execution capabilities, and currently stay engaged with our new shareholders and experts to define a new vision for ourselves. I'll come back to you with the exact contours of Sequent 2.0 once we are ready. Thank you, everyone. Thanks for joining us for this call, and please stay safe.
Thank you very much.